Good afternoon, traders and investors. Will back here with another one. Hope you guys are doing good. Today, guys, we had a gap up open into some profit taking, and there are a few tiny little red flags here that may indicate we are due for a slight pullback before the rally continues to resume, in my opinion, for the mid-end of December here into January and February, and for a beautiful 2024. So today, guys, we don't have any notable earnings for the day here. We do have some tomorrow, though. However, tomorrow I'm going to be covering Dollar General and Lululemon, two of the big ones that I do want to cover. Obviously, in the last few weeks, we got Dollar Tree. Now I want to see how their counterpart Dollar General is doing, and Lululemon, another retail favorite. We're going to see how they're doing as well off of the beautiful year that they've had so far. We will see if they're able to continue here on the rally towards their all-time highs. Consumer retail has been doing a great job of recovering. You can see it as well in Nike over the past 6-7 weeks here. So guys, today we are going to cover 10 stocks. Since there's no earnings today, I will replace it. We're going to do 10 stocks that I believe are good opportunities for myself to be picking up for potential swing trades via options. So I'm going to be looking to write put options to gain some entries into them, or for some long-term share buys. So this is going to be for swing trades or adds to my long-term portfolio. 10 companies that I'm looking at, that I look at pretty much every single day, that are still in decent dip territory here. So we're going to do that first. Then we're going to cover our major indexes here on the technical analysis basis. And then lastly, of course, we are going to do our major tech names. So without further ado, guys, let's get started right away. So markets down today after having a beautiful gap up, giving a lot of it back here, guys. So SPY down 0.4%, QQQ down 0.58%. And the rest of the market fairly mixed, only XLV Healthcare able to etch out some gain. So it was not a very good day in the market. Even the Russell, which was up massively on the day, ended red, over 2% pullback top to bottom on the Russell. So we'll take a look at what exactly happened in the markets and if it is still healthy. Now, on the heat map, you will see as well that major tech did have a bit of a pullback day. Again, we did have some green across the market here, but for the most part, not able to hold up the gain. So fairly mixed market. Not everything was red. We did still have some sector rotation in the markets, but definitely not a good day as big tech continues to show signs of weakness over the past week and a half. And on the one-day relative, you will see that utilities and industrials did etch out some positive gains here, as well as consumer cyclicals, but the rest of the market was really led down. Energy, relatively small sector, but energy still pulling back, led to the downside truly by technology. So guys, before we do our technical analysis, let me give you 10 plays for myself, not financial advice, of course, that I will be looking at. And if you like the plays as well, you can obviously do whatever you like. So guys, without further ado, let's get into it, right? So Fortinet is going to be play number one. Fortinet, I've talked about this one a lot on the channel, guys. It is a nice cybersecurity play, and we are at a very nice technical level that I've been eyeing for quite a while now. You may have seen me on the channel play a few put options ever since their earnings down towards the $50 to $48 range. And we are still here. So Fortinet in an extended weekly downtrend. We are just looking for the reversal pattern to start shaping up in the lower end of the range, all the way down to $48 here. So on a monthly basis as well, monthly is looking fairly good for potential signs of reversal now. We're coming into this big area that's acted as support in the past. Very decent looking chart for a bounce play. And also in terms of valuation, Fortinet, not that rich as a matter of fact. So if you will see down here, price to earnings ratio currently trailing 12 months stands at 36.19. But if we go on a forward basis, Fortinet is almost finished their entire year. So if we go on a forward basis in terms of EPS, let's do some quick math together. So the price of Fortinet right now does stand at roughly, let's call it $52. So I'll be using that. So at the end of 2023, they're supposed to bring in at about $1.56 in earnings. So if we do their price, $52, let's say, divided by the current end of year EPS estimate, you will see that they stand at about a 33 price to earnings ratio. This company, however, is growing very fast. 2024 will take $1.68. So on a forward basis through 2024, they are only trading roughly at a 31 price to earnings ratio. Not that rich for the amount of growth that this company has, in my opinion. They're growing revenue in double digits, 15.5% revenue growth per year over the next 5 years, and EPS growth does remain solid as well at 13%. 15.4%. Decent little level to be picking up some shares of Fortinet for myself. So I will be looking, if this dip does continue, at Fortinet for a buy. And now second is going to be CELH, so Celsius Holdings, the energy drink manufacturer that is currently in partnership with Pepsi's distribution channel. So CELH has been having a bit of a technical correction ever since hitting the all-time highs in September. So you will see here that they are currently down 25% off the all-time highs, and we are approaching a very decent area of support. On the monthly, this chart is in a beautiful uptrend still, and we are just looking for a monthly higher low for further monthly continuation. The sales channel for Celsius Holdings is said to be absolutely amazing, and their guidance for the next 2 years is very, very good. We're talking about double-digit revenue expansion here and double-digit EPS growth as well. So if Celsius Holdings continues to trade down below in the $48 to $50 range, I will be looking to make a play on this company. We will see that there's a very beautiful area of support here that's been lasting for quite a while here. You have your 200-day moving average right as well at around $48 too. So I will be looking to make a technical reversal play on Celsius Holdings. I have been playing a lot of this company on the channel for the past month every time that we approach the $50 range. So keep an eye on this one as well. Third company we're going to cover is Google. Google needs no introduction. Obviously one of the magnificent seven, and Google is having a bit of a technical correction as well. So previously off of the previous highs by about 6.5% all the way down to roughly 8%, and Google currently sitting very, very nice in a weekly consolidation range. So you will see that ever since the month of September, pretty much, we've kind of been trapped here between the $140 range and $125. My sweet spot for Google remains between $127 and $120. Get me a little dip into here, and I will be adding some shares. You guys know that I currently have a position of 100 shares in the trading account for Google, but if ever we venture down in this area, I will be adding another 100 shares in terms of the trading account, and most likely to my long-term portfolio as well. Google at that point would be trading pretty much 16% off of their all-time highs, and the valuation on Google is currently very, very good. Their price to earnings ratio for the trailing 12 months is around 25, and on a forward basis, I will spare you the math, it's about 23. Very decent valuation for Google. And on the monthly time frame, we are just looking for the monthly breakout as well. So very decent time for me to be adding some shares. Very decent support level down here as well. Now, fourth, we're going to go over AMD. AMD, I've been talking about it a lot on the channel recently, and they're finally having a nice little pullback after this monster rally off of our $94 lows right here. So the sweet spot for me on AMD does remain between about $112 and $105. Get me some shares into that area. I will be picking up some shares for my long-term portfolio, and I will obviously be making a swing trade. I do have an open position here in terms of options for this Friday for the 115 put that I've sold for 98 cents. So if I get there, I will be assigned 100 shares at $115. And if we move a bit lower, I will be looking for more. This is a nice weekly breakout, and we are looking for the weekly higher low for further weekly trend continuation to the upside. And on the monthly time frame as well, your monthly breakout is started as of the month of November. We are just looking for monthly uptrend continuation. And we had a beautiful event today from AMD. CEO Lisa Su said that they were working on a way to compete with NVIDIA, which I'll cover at a different time here, but essentially they are releasing pretty much the same data warehousing services as NVIDIA, or basically data processing service using very, very, very high level GPUs to get that done. And they are partnered with Microsoft to make that happen. So AMD on a nice little technical correction, get me a little bit more, and I will be nibbling. You can see that this area is a very beautiful area of support in the past as well. And now fifth company we're going to look at is Starbucks. So Starbucks has been on a heck of a dip recently. Ever since their most recent high right here, we are down about 11%. Nice little recovery today. I do have an options play for Friday on the 94 puts that I got yesterday for 46 cents. Today, nice little recovery, and these options are trading about 5 cents now, so they're pretty much worthless. So I will pocket this premium, but if ever Starbucks continues this dip into its pretty much post-earnings area, I will be looking to add more shares. This is a very decent area of support for Starbucks. It has been previous resistance in the past and now has been acting as support. This whole 94 all the way down to 90 area is a very decent area to pick up Starbucks at. They're currently still trading a decent amount off their all-time highs, still about 24% off their all-time highs, and their earnings were absolutely fantastic. The China market for them is recovering beautifully. So we'll definitely be looking to pick up some shares of Starbucks if they continue trading lower into this lower $90 area and continue to look at making some swing trades on the company as well. Now, 6, we have Pepsi. Pepsi needs no introduction as well. Haven't played it in a while, but it is in my sweet spot and was featured in my top 10 value stocks for the end of 2023 and 2024. And we will see that it is still in my sweet spot. So look at this area right here, 168 all the way down to 154 is my sweet spot for Pepsi. Why? Because it's a big area of technical support in the past. I know the range is fairly wide, but you can see that every time that the price does dip into this area, it usually starts rejecting pretty nicely towards the upside. And we are just looking for Pepsi to complete a potential weekly uptrend reversal. After being in a solid weekly downtrend now, ever since the month of May, we are looking for a bit of that reversal, looking for the bulls to set the weekly uptrend in motion. Pepsi decently still off of our all-time highs here, off about 16% off the all-time highs. Any more is going to be very good in terms of dip buying opportunity. You can see that their growth is revenue of 4.4% a year. Not that fast, but it is Pepsi. They are a very mature company. The growth is in the EPS, guys. They just continue to print free cash flow and continue to print very beautiful EPS numbers every single year. So that is why Pepsi is one for me. And you will see that on the monthly time frame, every time we come under these longer term moving averages here, so the 12 and 26, price usually tends to recover within the following few months. So I will be looking for a good recovery play in Pepsi, and I do still like this dip opportunity. Now, next we're going to cover Louis Vuitton. Louis Vuitton is one that I don't bring up that much on the channel, but when I do, you guys know the drill. I am very bullish on this company. Company has great growth prospects here over the next 5 years. Revenue of almost 7% growth for the next 5 years, and EPS very beautiful double-digit gains over the next 5 years in terms of EPS expansion. They're currently trading in my sweet spot, currently off the all-time highs by roughly 23% as well, and in the dip territory after a very big sell-off since the month of July from the all-time highs. They finally found a slight bottom in the 140 area, and now Louis Vuitton trying to reset for a weekly uptrend attempt to the bulls. They have not recaptured this 12 EMA ever since this drop, but you will see that Louis Vuitton is very good at just churning out gains over the years. So this is a very beautiful monthly pullback for a monthly higher low. Anything above 115 is for a monthly higher low for price expansion to the upside. Louis Vuitton with very good growth prospects over the next 5 years. So as long as this company maintains in this range, I will continue to add positions to it. You can see that it is trying for a daily trend reversal at the same time, right? Daily uptrend was confirmed. Now we are just looking to continue to push the bar into a weekly trend reversal to the upside for the bulls as well. So looking very decent on a technical basis, and on a fundamental basis, company is fairly cheap, only trading at around a 23 price to earnings ratio for trailing 12 months. And on a forward basis, guys, it stands at about 20.5. So relatively cheap for what it is. Unfortunately, no options on the US side for this one, so I'm going straight shares. Now, the 8th company rather, is going to be Baba. So Baba is one that I did take a position on pretty much at earnings, expecting them to do good, and they did do good, except for they had 2 little anomalies in their earnings: Jack Ma selling shares and them refusing to spin off their cloud business. So that kind of disappointed investors, and you've had a little bit of a technical sell-off here. Ever since the day before earnings, we are down an additional 18%, and Alibaba is doing excessively well at what they do best. Their retail business is very good. They have a revenue growth of 8% per year, and EPS growth, look at this EPS growth year over year, guys, for the next 5 years is going to be almost 20%. That's exactly what you want to see. Alibaba now trading back pretty much to close to under IPO prices, and all the way back to 2015. If you didn't pick up on the dip last year in October, this is pretty much the only opportunity since 2015 that you will have to buy this company as cheap as it is. It is one of my very best growth plays for the next couple of years, and I will be looking to add some shares. If the company continues to dip into the lower 70s and even higher 60 areas, I will be adding another contract. You guys know, if you've been watching the channel, I did get assigned 100 shares at $82, and if we dip into the $60 area, I will not hesitate to add another 100 shares. Alibaba, unfortunately, trapped in this extended weekly downtrend, so we are just looking for the sellers to get exhausted at this point. RSI is completely crushed on the daily, so I am looking for a temporary bounce in this stock. We will see if they can get it done. But this has been plagued by negative economic China news, so any recovery in that front is going to push the stock higher. Alibaba on a trailing 12-month basis is only trading at about a 10% price to earnings ratio. Very, very, very cheap. And if you go through 2020, if you go through the end of 2023 and 2024, let's do it together, guys. And so just so you'll believe me, right? On an EPS basis for the end of 2023, trading around $72 as they are right now, right? So $72 will do the end of 2023 estimate. So 72 divided by 889 in EPS. Their price to earnings at the end of 2023 is going to be 8.1, very low. And through 2024, it's even better. Through 2024, at current prices, you're talking about a forward price to earnings ratio of about 6.6, which is absolutely very, very cheap. So that is why I'm adding to the company. Yes, it's in a beautiful area of previous technical support down here. This is usually where the stock has bottomed out in the past. Obviously can't call the bottoms because it is just falling down without any clear support having been set recently, as it broke through the $80 range, which was the most recent big support. But I am a buyer of BABA down here. Now, ninth, we're going to cover Palantir. Palantir has been one that we've been covering a lot on the channel here because they are on the verge of having potential S&P 500 inclusion. Now, they are in a very nice technical correction here. Daily downtrend off the most recent highs by about 22%. And currently off your all-time highs by a lot more than that, guys. Still about 62% off your all-time highs. I do believe that Palantir is going to be able to get its way into the mid $20 range here over the next quarter or so. And the weekly trend is just absolutely beautiful. Nice weekly uptrend. So we're just looking for the bulls to maintain that. And we are also on a current monthly breakout pattern. Chart is set up very well, and the fundamentals are very good as well. On a forward basis, Palantir is not that expensive either, guys. So they just came in to profitability, but with their EPS expansion over the next couple of years, the company is really not as expensive as most people make it out to be. I do believe it represents some very good risk to reward. And if ever the company continues to fall, we have a very beautiful support level down here around the $15, $16 level. So I have been taking a slight few options trades in the past couple of weeks, and now I do have some contracts open at 17.5. So if the stock continues to drop below, I will be adding more contracts the lower we go here, especially if we continue to push down into this lower $15, $14 range. I do think it's a good opportunity to pick up a swing trade for Palantir for myself for the next 6 to 12 months, guys. And now lastly, American Express. So this is going to be the last company of the top 10 here. So American Express has been one that I brought up in my top 10 stocks for the end of 2023 as well. It's had a beautiful rally ever since we've made that video on the channel here highlighting my sweet spot. You can see exactly what it did when it touched the $140 range. It really popped beautifully into the 170. So now we are topping up at the top end of this range, running into a bit of resistance. So American Express looking for the weekly trend reversal here, guys. So that is going to be a very, very beautiful opportunity for picking up American Express. I do think they are also on the verge of having a potential monthly breakout to the upside through next year as interest rates do come down. So American Express, one of the top 3 credit card credit card issuers in the world, as a matter of fact, and they are the ones that are the cheapest in terms of valuation and percentage off the all-time high in relation to MasterCard and Visa. That is why I'm getting them. You can see growth numbers here are very good. Revenue 10% growth over the next 5 years, and EPS growth 11% over the next 5 years. So just looking for that weekly higher low, guys. If ever we do pull down into the lower $160 range or any 150 handle whatsoever, I will be looking to play some options in this sweet spot right here. I don't believe we get back into my true sweet spot, so I will just be looking to play 160 all the way maybe to about 155 in terms of that, to potentially add some shares to the long-term portfolio or make a swing trade via options. So that's pretty much all that I had for you guys for the swing trade opportunities. Hope you like it. Obviously, I have a list of stocks, about 300-400 stocks, value and growth. And these are pretty much the top 10 that I picked up that represent some good risk to reward and good dip buying opportunities. They're all companies that are currently profitable, and they're all companies that have very good future growth prospects as well and are solid businesses. So without further ado, guys, let's get into our major technical analysis, yeah? So SPY, what is SPY currently doing right now? You can see that they are currently selling off, and you can see it better on the futures chart here. We are testing the previous lows, guys. Any further days like this, you're testing your 12 EMA, and you are testing your most recent lows here. I'll pull it up on SPY actually. 453.40 is going to be the line in the sand level. Break that, guys, and you have lost the series of daily higher highs and higher lows. You are in the potential of setting up for a daily downtrend. Daily downtrend, no problem, guys. This is the sweet spot area. 451 down to 441 is the area where I believe that we most likely retrace into. Set the daily downtrend here. It's no problem at all. This will just be very healthy weekly consolidation, potentially for the next week or so. And then I do believe we get an end of year rally and into January as well here, off to the top here and into new highs as well. So just looking for a bit of weekly consolidation potentially and onto higher highs. No red flags as of yet, guys. If we lose this level right here, don't start to panic. It will be a technical loss of the level here, technical loss of the daily uptrend. If the bears then set the daily downtrend, no problem at all. Just zoom out, guys. The bulls are in full control of the weekly for price expansion, and also full control of the monthly, especially with that beautiful November close too. So no red flags as of yet, guys. QQQ, same situation. QQQ looking like it maybe want to set the daily downtrend ahead of SPY, and you can see that best on the futures chart, right? Look at this futures chart. Almost potentially losing the level here. This range has been the range pretty much since this time as of November, pretty much, guys. We're pretty much 3 weeks into this very, very tight range on QQQ on the NASDAQ right now. So if we lose these lower levels, you will potentially be in a daily downtrend. So the level for me is 383. Lose that and you do set up for a daily downtrend. No problem at all. This is the sweet spot, guys, where the bulls are going to step in. 380 all the way down to 370 is the area that I'm targeting. Why? Just a beautiful weekly bull flag pullback scenario here into potential price expansion into the end of December and early January as well. So we are just looking for a slight technical pullback, a lot of good support down here. No red flags as of yet. The long-term bulls are in full control, and you see that best on the monthly time frame as well with that November break to the upside. So very, very good performance here by the indexes, have been holding up gains as best as they could. Now slightly rolling over, but no red flags in my opinion as of yet. We're rolling over into big areas of support where I do think buyers step in a big way. Now, moving on to financials, guys. So financials still struggling with this overhead resistance. We've been calling this ever since price was moving into it, right? 36 to $37 was the area of resistance. So if bulls potentially topped out, well, need to watch this area right here. 35.18 is the area to watch. 1, 2, 3 nice bull legs up, and now we are potentially due for some consolidation. So consolidation could bring us down lower. If we do set the daily downtrend, no problem at all, guys. Weekly is looking very, very beautiful as well for some potential price pullback. If we do pull back, target 35 all the way down to 34 is going to be the likely area to pull back. That is where all your support is. It's where your moving averages are as well. So if we do pull back, just looking for a technical pullback here into mid-December, and then for potential rise into the end of the year and early January as well. So the bulls will potentially have to do this in 2 steps if we do pull back. As of now, looking fairly healthy though. We are just looking for a daily lower high and daily higher low here and potential price expansion into this range. But if ever we set the daily downtrend, don't say I didn't tell you so. It is fairly extended here, but it's been a very beautiful past 5-6 weeks in the indexes. So I do expect we might get some dips into the end of the year, but all dips are still for buying. And now XLV Healthcare. XLV Healthcare is the one that has been holding up the best over the past couple of days. 0.08%, only index that was green on the day here today. So 1, 2, 3 beautiful legs up. Any pullback is just for a higher low. Anything above 129.30 is going to be for a daily higher low attempt for further price expansion here. Keep an eye on this area, guys. 130 down to about 129.50 is going to be the area of confluence with your moving averages. We have some very good previous resistance that should be acting as support in that area as well. So keep an eye on that. The bulls are not having any red flags as much as the other rest of the indexes here. But if for ever which reason we do roll over into a daily downtrend, no problem at all. The bulls have created so much space off the lows that we can't afford it for a slight weekly pullback here to set up for a beautiful weekly uptrend here into the end of the year and early January. So keep an eye for that pattern if ever the indexes do roll over on pretty much everything. IWM Russell still pulling back here, guys, today. So take a look at this on IWM. We had a beautiful gap up open here, but now look, profit taking almost 2.1% to the downside, top to bottom today. Nice little day of profit taking for the bulls here. No real red flags as of yet. We're still very, very high off our most recent higher low here. 177.19 is going to be the area to watch, right? So 1, 2 bull moves up into a beautiful area of tightening consolidation range right here. And now we have a third leg up here on the daily time frame. So any pullback above 177.19 is just for a daily higher low for further price expansion. Looking very, very good on the Russell. No real red flags as of yet. Just kind of consolidating within itself over the past 3 days. So we'll see what happens with that. Bulls with tons of space to work with. But if for ever which reason, guys, we set up a daily downtrend on this chart, no problem at all. The bulls have created a lot of space on the weekly off of the lows here. Could be pulling back into the 181 all the way down to 177 area would be a likely target for me for just a weekly higher low for weekly price expansion into the end of the year. And next year for the Russell, I do believe is going to be the breakout year for Russell and the growth stocks. So we will be putting together some lists of small growth stocks that we could be positioning into over the next couple of months to start really building those positions and getting ready for those interest rates to come down. Now, lastly, Dow Jones. Dow Jones as well pulling back about 0.2% on the day, but as you can see, consolidating pretty much sideways over the last couple of days. So the area to watch for me, guys, is definitely going to be this area down here, right? 35,000 is the real area to watch. We had 1, 2, and then 3 clear bull legs up here. So very, very good motion by the bulls to the upside. Now we're just looking for the daily higher low. Anything above 35,000 is just looking for a daily higher low for further price expansion. If for whatever which reason the markets roll over and we get sent into a potential daily downtrend, you guys know the drill, no problem at all. Why? Because your weekly bulls are in full control. They've engulfed this entire move to the upside. Now we're just looking for a little bit of pullback. And if we do pull back, guys, 35,500 down to about 35,000 is going to be your sweet spot area that I do think the bulls react nicely from. Just looking for the breakout, retest, and then move higher into the end of the year potentially and into January as well. Value names set up very, very, very beautifully here for the interest rates to be potentially coming down and for inflation to be coming down as well, guys. So keep an eye on that. No red flags as of yet on the Dow Jones. Now let's move right into big tech. So Apple after a very nice day yesterday, consolidating a bit today on the day, down almost 0.6%. No problem at all, guys. Anything above 187.56 is just going to be looking for a daily higher low on Apple for further price expansion as well. So Apple now on its first leg of this new daily uptrend right here. So we are going to be looking for them to continue that. If ever, for ever which reason, guys, if we do set a daily downtrend and roll over this level right away, no problem at all. It is still just weekly consolidation here. Apple for me, I've moved up the sweet spot. Apple for me, if ever we get down into below 185 all the way down to about 175 is an area that I would consider making a few swing trades on Apple as well. For now, slightly extended for me in my opinion. So just going to be looking for a bit more pullback on Apple to potentially get that and ride it into the end of the year and into 2024 as well. Apple can only do good things as was shown by their earnings, even if a few of their lines of business were slightly down. The lines of the business that make the most money, aka services, have been net up, and that's been doing a really good job of lifting this company higher and lifting their profitability as well. So no red flags for Apple. Apple is still in a beautiful little breakout pattern right here. So anything above 187.42, just looking for a daily lower high for price expansion. Weekly looking very good, still a weekly bull flag for price to move to the upside as well. Now let's move down to AMD. AMD, heck of a day of consolidation here, guys, today. AMD top to bottom. Look at this from pre-market, right? 122.83 all the way down to about 116.50, guys. We're talking about over 5% top to bottom consolidation on AMD. So AMD now potentially setting up for the daily downtrend attempt from the bears. Am I nervous? Not at all. We covered this in the previous top 10 stocks area, right? So 115 down to pretty much 105 is the area that I will be looking to shop for more shares of AMD. Why? Because even if you set the daily downtrend setup right here, doesn't matter. Just looking for the weekly higher low for the bulls here. Beautiful weekly uptrend in motion here. Just looking for them to set the higher low and then further price expansion. AMD with some very good guidance, guys, over the next few quarters. So I would not count this company out. And it's still representing one of my best risk reward trades for semiconductors, currently still 30% off of the all-time highs. Very good growth prospects, right? And they are number 2 in the market, set second to NVIDIA. So any pullback here on a daily downtrend is going to be for buying for myself, just looking for that weekly higher low. No real red flags as of yet, just bears are in short-term control of this trade. And that's what we were expecting. All this whole area I was expecting. I was saying, guys, if we do pull back, keep an eye 115 to 110. I will be shopping. Now let's move on to Amazon. Amazon as well pulling back today from the high of the day, right? 1.61% of the downside, but from the gap up open, you can see down over 2% on the day. So Amazon still battling with this area right here between these two yellow lines. 145 down to 140 is going to be the area to watch. Previous 52-week highs, a big area of congestion, guys. You saw it here in the past, and it is acting up again. So Amazon, if Amazon sets the daily downtrend, we are just at that point looking for further weekly consolidation. Expect the bulls to put up a very big line of defense here in the 140 area if we do pull back all the way there. So daily downtrend is potentially on the table for the bears, but that's okay. We're just looking for the weekly higher low for further price expansion. Amazon still very good risk reward in terms of big tech. Pretty much the big tech name that's still the most off the all-time highs, guys. 23.5% off your all-time highs. Return to profitability, return to cost control. Everything's looking very, very good for the company. Indeed, Amazon, if it does trade below 140, potentially down to about 136, 135, I will definitely be looking to make some options trades on Amazon. But as of now, no real red flags, still holding up support. Now let's move down to Google. Google trading down as well. So Google also in jeopardy potentially of setting up for the daily downtrend, guys, right? So a lot of your major tech here potentially setting up for daily downtrends, but that's okay. Why? Because Google still has a lot of space to work with. And my sweet spot for Google, 127 down to about 120, is quickly coming up. I do have a position here at 134 that we opened last week. That's okay. I will be averaging into it. Google still battling here, still trying to set the weekly higher low, and they have a good chance at this. This move up was a very nice engulfing move. Now need to hold this low right here, 121.56. Anything above that is for your weekly higher low for potential weekly uptrend shift to the bulls. If we do continue to pull back a bit more, I will be looking to add a few more positions on Google. So watch out for that daily downtrend, guys. And if the daily downtrend does continue, watch for your lower time frames being oversold, okay? Watch for the lower time frames getting oversold, and then eventually watch for potential daily to get to lower oversold levels on the RSI as well. If that starts happening all the way down here, 127, 125, I will be looking to average. I will hope that Google does hold this pretty much tight range. I do expect good things from the company over the next few quarters as well. It's just we've been trapped in this big, massive range here pretty much since the month of August, right? You can see that right here. And Google is still decently off the all-time highs as well, has not set new all-time highs like a few of big tech has this year, still about 14% off the all-time highs, but very decent valuation, 25, we went over that as well. And now Meta also potentially setting up, guys, for the daily downtrend, right? So you can see it right here, potentially setting up for the daily downtrend. Loss of 314 would mean your daily downtrend is set. Is that a big deal? Nope, that would be only short-term control for the bears. Why? Meta weekly uptrend is currently in motion here. Anything above 279, just looking for a weekly higher low for further price expansion. Look how well they've defended this 12 EMA pretty much all year. So that is why we've been reacting at this level as well. But if we slightly lose it for a bit and set a weekly higher low down here in the mid 310s, wouldn't surprise me if the bulls are able to rally that into the end of the year and into Q1 next year as well. Meta with some very beautiful earnings, and they are still doing great cost control. I do expect good things for the company over the next couple of months. So Meta, I didn't include this one in the list, but you guys know I've been talking about it a lot on the channel. Meta, if Meta starts pulling down, guys, into the 310 down to about 300 range, I will be adding some shares. So keep an eye on that. Just looking for a weekly higher low here. And we are just looking as well for the continuation of the monthly uptrend. So any dip is for long-term shareholders to be buying some shares. And now Microsoft as well. Microsoft potentially setting up maybe for the daily downtrend. Remains to be seen what happens on these indexes, right? But if Microsoft sets the daily downtrend potentially for the bears here after losing your 12 EMA on the daily, right? All of these things have lost you. We remember what we were watching, guys, over the past few weeks? The 12 EMA on the 4 hour. Well, now that we've lost it all, you can see the bears have momentum here. So if we do set up for the daily downtrend, no problem at all. Why? You guys know the drill by now. Look up to the weekly uptrend on Microsoft. Just very healthy weekly consolidation. Microsoft, in my opinion, the next area of consolidation where it could potentially stop is roughly between 355 and 340. That's going to be the big area of confluence in the past. You can see that better on the daily time frame right here. It's the previous all-time high all the way down to the bottom area of this previous resistance area, right? So if I had to put two lines on the chart for you guys, right? So we'll put it pretty much 355, this area right here, all the way down to roughly about $340. That really encapsulates most of your overhead resistance, slight pop through, resistance, as you can see here, breakthrough. And now if we come back, I think that is the likely area that we come back to sit at the worst case scenario if we do have a bit more weekly consolidation. But Microsoft looking very healthy, guys. It is a monthly uptrend breakout, so no red flags on the long term whatsoever. Bears might be in short-term control, but the bulls control everything else. Now moving down to NVIDIA. NVIDIA, who really started this move down for everybody after their earnings, right, continues with the daily downtrend. You can see big reversal top to bottom down today, almost 4.23%, ending about 2.5%, 2.25% to the downside here. So daily downtrend just continuing for NVIDIA at this point. Yesterday's video, I was saying that any bounce is just for a lower high. Anything below 47 was just a lower high for potential continuation of the downside. It's still all right, in my opinion, guys. Still, the bears have not taken back too much of this move, but would not like to see them push anywhere below 430. 430 is really going to be the line in the sand level for me, so keep a close eye on that on NVIDIA. Weekly uptrend potential is still protected here, but the more we pull back, the more you set up for continuation of this extended range here that now we've been in pretty much since the month of June, guys, really between this wide range here, 400 to roughly $500 all-time high, really been stuck in this range. Completely normal though, guys. We had a heck of a monster rally, now just kind of consolidating at the top, letting the time frames really cool down. You can see this big cool down on the weekly time frame, even though we've been pretty much flat in terms of price within this range here. So no red flags as of yet, guys. The daily downtrend does continue here, but just keep an eye on this level, guys. 430, in my opinion, is really the level to watch. Beyond that point, it becomes really tough for the bulls to just V-shape this, okay? So just keep an eye on that on NVIDIA. But as of now, NVIDIA is still looking healthy, still doing just some consolidation sideways. And now Tesla, right? Tesla had a very good start to the day, but gave it all back, guys. You can see from the open, gap up open, we were up almost 3.25% at one point today, and then giving it back top to bottom, almost 3% of the downside, still ending green, but Tesla unable to break out, guys, unable to break out. This was one day of breakout, but in all reality, guys, you have a big range here. 246-ish to about the lower 230 range is your range. So break that to the upside and the bulls will have recaptured your daily uptrend capacity potential here, and will also have put in a weekly uptrend as well as soon as this is broken. So we're still looking for the weekly uptrend reversal to the bulls, but lose it to the downside. The bear set up for the daily downtrend here potentially, and also further weekly consolidation. You guys know it's a weekly downtrend, so we are looking for the weekly higher low. Now it just remains to be seen. If we break that to the downside, how low will the bears get, and will the bulls be able to stop this and reset for a weekly uptrend reversal here? So weekly uptrend, anything above 194 is just for a weekly higher low for price improvement to the upside. And keep an eye, guys, Tesla deliveries here at the end of the month, right? 1st of January, not expecting very good things. The guidance wasn't very good, but they are trading relatively cheap in terms of their prior valuations. And if we do come down into this area, guys, 230 down to about $200, I will be looking to make some options plays on Tesla as well. So keep an eye on that. Still in this range, very tight right now. So either way, this range breaks is, going to be +1 for the bears. If they break it to the downside here, just weekly consolidation continues, but bulls still looking healthy for the potential rally. And if we break this to the upside, they confirm the weekly trend already. So now moving on to Palantir. Palantir, guys, down another 6.39%. This is a heck of a nice dip, guys. Palantir still down about 21% from their most recent highs here. Daily downtrend fully in control by the bears at this point, right? And why is that not that big of a deal? We still have a decent amount of space here, guys, on the weekly, but is getting pretty dicey. But Palantir here on the lower time frames is getting pretty oversold. You can see that on the RSI right down here. Very oversold on the 4-hour RSI. And the 1-hour RSI has been oversold now deeply for the past couple of days. So Palantir still looking for a potential bottom here. Potential bottom area, I was looking, guys, $18 to $17 was the first area. We're still not through the $17 mark, but after that, you really fall a bit deeper here, guys, all the way to $16 and then the $14 range, right? So this was stop number 1. Stop number 2 is all the way down here, but I would really like to see the bulls put a stop to this before your 12 EMA here on the 26 EMA here on the weekly. As you guys can see, we have not lost it all year pretty much. I've only just touched it and then bounced off it every single time. So looking for the bulls to protect this, because on the fib level, right? Fib level, you don't want to see the bulls, the bears take back too much of this move, guys. Over this would be over 80%. It could set you up for potentially for a nice setup for the weekly bears in terms of a weekly downtrend. So I don't think the weekly downtrend is on the table because Palantir still has some very good fundamental news out for it. But if for whatever which reason, guys, we get plagued into more and more consolidation, well, I will be shopping. Once again, guys, I have been shopping in the 17s, but if we pull back down in the 15s, 14s, still a very good area for Palantir in the long term, in my opinion, guys. I am here for the long term for this company, not just a swing trade for me. I do have shares in my long-term portfolio, which I'm always looking to add to, because I do believe once we get S&P 500 inclusion and over the next year, when they continue improving their EPS, guys, I do think we are going to get back into this mid $20 range. And from here, that is still very good price appreciation. We're talking over 50% price appreciation. So I am accumulating as many shares as I can at the best price possible. As of now, no real big red flags, but daily bears definitely in full control of this chart. And on the weekly pulling back even more, guys, even more. Don't want to see them lose this 1629. And now lastly, PayPal up on a down day for the markets here. So up almost 3%. So PayPal just trying to continue its series of daily higher highs and higher lows. Now trapped in a bit of a channel here, guys. So I am watching 57.24. Lose 57.24 and you potentially set up for the daily downtrend. That would just mean that weekly consolidation is underway. We are looking for the weekly trend change on PayPal. Can't really say too much else on the technical basis, guys. It's just a daily uptrend, and we are just looking for potential weekly consolidation. Hopefully, as much of it is as sideways as possible on PayPal. So keep an eye on that. We are still looking to break out of the $60 range. It cannot close above $60 for the life of it, guys. You see how hard it is to break this last little bit of resistance. If we do break it, guys, the next area that we're looking for is obviously the 64, higher 63, 64 area here. And that would be a much needed move for the bulls that would really give them some legs in terms of weekly time frames here, put us nicely above the weekly moving averages and set up nicely for a weekly breakout, retest of this area, and then move higher on the higher time frames here. So PayPal not looking too bad at all. But if ever for which reason we do break down and get towards 55, I will be looking to add some shares of PayPal. That's pretty much everything that I had for you guys today. Hope you guys enjoyed the video. If you did, consider smashing that like button. Would really appreciate it for the algorithm. And second, consider subscribing to the channel, guys. We're almost so close to 500 subscribers. So appreciate every single one of you that subscribed so far, guys. You're really making the journey amazing for me. And lastly, if you have any questions, as usual, macro, technical analysis, options, stocks, you leave them down below in the comments and I'll get back to you as soon as possible. I'll see you guys tomorrow, Thursday, after the close. Take care and peace.